What's up, everybody? Just wanted to basically do a recording for this week. Reason being is obviously with Mother's Day, trying to spend some time with family, all that kind of stuff. So obviously this week's, I guess you could say, higher time frame narrative or Sunday forecasting call will be pre-recorded for that reason alone. So basically what I'm looking at right now is a monthly chart, and I just kind of want to dive into just understanding what's happening. Obviously from the higher time frame, it's always good to have an idea of what's happening for the week to come. Obviously you can just basically see where order flow has shifted, come back, realigned, and the next objective in the market is to ultimately take out these lows. So just having that tone and understanding obviously that we're in a very heavily bearish market. A lot of times it's better to just sort of wait for the confluences to build in that higher time frame narrative direction. Obviously there's tons of intraday plays that we can take with the pullbacks and stuff like that. So what I'm going to do is just kind of map out obviously what it is that I'm sort of looking at. Just try to decipher. So you'll notice I'm using the FXCM chart as well. Reason for it is it just has more data to be able to sort of grab as opposed to the forex.com one. So for the time being, I'll be using that for my higher time frame stuff on the Sundays. Just like I said, we have more data to sort of kind of pick apart. So looking at this, and the reason why I have this POI sort of selected is obviously like it's not a strong low by any means, but it did in fact take some form of liquidity across like this. Okay, let's just go like this, draw in our sweep. Okay, that's not going to show up on my weekly chart, but you can see that we've essentially swept liquidity and then broke our internal structure, right? So when you see that, there's obviously some form of demand that's in there, and I think that already got mitigated. If I was to read this, the way that I'm sort of thinking about it is we've already sort of come into this demand range. We've pushed out of it, and then basically failed to take the high, and then order flow got confirmed on lower time frames here to switch to bearish, right? Realigning with the higher time frame trend. So right now, is this a valid POI to take out the highs? No. Obviously not. We're in a very bearish market. I wouldn't be that naive to say that we're going to be going higher than up here, right? However, I do, have a suspicion that we should be able to potentially see a small catalyst for a pullback at some point. But I do think on the lower time frame you can start to see what's sort of happening. If you look at this, I mean, we're basically just creating an internal range or some form of like a range across like this, and it looks like we've already kind of taken the highs, and that was with I believe it was FOMC news. So we've already taken the highs. So if we look at this right now, and you just look at it from, again, just like the higher time frame, in this case the daily, we've already liquidated these highs. Where does liquidity sit in the market? And that's kind of like the recurring question that's always kind of stewing around in my brain is, okay, if we've taken the highs here, we're in bearish higher time frame order flow, where's the next spot that orders are sitting, right? And it's really simple. The orders are sitting underneath these lows, right? Tons of passive orders in the form of either sell stops, limit orders for stop losses, whatever it may be. Bottom line is the next area, if we were to try and push higher here, we would need to essentially take out this low. It's sort of how I view it. Now, obviously, we might have lower time frame liquidity that we can look to target potentially. That might change things up in the short term. But if we're just looking at this specific time frame, it becomes very easy to kind of decipher what the next move, in theory, should be, right? And it should be that these lows should get taken, and from there, we either come back into this supply range or we break above, creating a daily change of character, which then we could start looking for a deeper pullback into something like this, right? Now, Of course, this is all going to depend on how lower time frame sort of correlates with it, and ultimately we just react to the market, right? So could we start going higher from here? I mean, there's no reason you can't. I just think that it's more reasonable to think that obviously these lows have a shitload of liquidity underneath them, and if you think about this in the context of hedge funds, larger institutions, if they want to essentially fill their bags up with a shitload of orders, there's a lot of them available underneath these lows. So all that to say, if we go down to sort of like the 4-hour chart, you can see just how poor the delivery was. We did get a half decent wick in, but immediately order flow is basically starting to realign on that lower time frame in and around this region. So you have to remember that the swing point here in terms of the 4-hour, this would probably be more of like a 15-minute swing low, is right here, right? So swing low, swing high, you can see that there's been a clear break. Yes, it's only a wick, but depending on the time frame that you're utilizing, you'll be able to see obviously a clear body break. Now, again, could you play the longs in this region? Yes, of course you could have. But the bottom line is like we need to see what happens in and around these regions to confirm whether or not these lows are going to be weak, right? So if we see something in here that essentially looks like this, we come back down, sweep, sweep. You know what I mean? So it's once order flow realigns, this is what basically gives us a little bit more certainty about these lows being weak. So personally, I don't want to say that I like oh my goodness, the lows are going to go for sure, but I definitely think that it would make more sense for these to get taken out before trying to pull back higher if we even decide to do that. So, and you can just see that we've barely mitigated this. I believe this is like 120, 150 pip range. Yeah, so 160 pip range. So we've just to say mitigated, and it's not even demand. It's an area in which we've expanded from in the past. So, like I said, I don't want to go on to too much of like the lower time frame stuff. That's all stuff that we're going to cover in the narrative as well as the trade recaps. But the bottom line is, if you were looking at this right now, and we've just liquidated this, and then followed up by a break of swing structure, what's the next move, right? If we've broken down and now we're respecting the high and we've seen the lower time frame confirmations, to me, these lows should get taken, and then ultimately, if we follow through, we could start looking for potential buys counter against the H4 into the larger supply range that's created, or potentially take these a lot higher with a higher time frame pullback up to something like this, or even higher than that. So that's today's Sunday forecast call. If you guys have any questions, of course, you know how to reach me. I will probably not be super available today, just given the fact that it's Mother's Day. We're going to be going out and doing a whole bunch of different things. So, hopefully you enjoy this, and looking forward to hearing your feedback. And if you have any questions whatsoever, I'm happy to answer them. Just make sure that you're putting them in the appropriate channels. Have a good weekend.